Welcome back, everyone, to NYU Grad's Daily Podcast. It is Thursday, November 2nd, and wow, what a crazy rally we had today. I'll be totally honest, I did not expect a rally this strong today, but now we have strung together 4 straight days of positive gains, but today was explosive. I have a hunch here that a lot of short covering happened today because just taking a look at some of the things that were up like 20% plus, a lot of those names are stocks that have been just crushed in the past few weeks. And we have the all-important Apple earnings, which came out. I'm recording this at 5 p.m. New York time. Their conference call may have just started, but we're kind of lower, just a little bit, maybe like a percent from the Apple close. But let's jump right into this. I don't want to deviate from my format. So for new highs, we had 154 today on the NYSE, Amex, and NASDAQ. 154. And we had 212 new lows. So that is an improvement. We'll talk about that because, as you know, I report on this every day. And up until now, it's been like 10 to 1 losers to winners. Like we'd have 40 new highs and, like 400 to 1,200 new lows. So that's an improvement. Advancing, we had 81% of shares advancing today versus 14% declining. We still have 71% of stocks under its 50-day moving average, but that's an improvement, a big improvement because we were over 80% just recently. And we are now at 69% below the 200-day moving average. All sectors were green. The leading sector was real estate, and I'll talk a little bit about the causality of this. But yields, yesterday they were soft, and I'll be honest with you, I don't know where yields wrapped up today because I was just watching equities all day. But yesterday on Wednesday, yields were kind of soft and closed at the lows. Oh, and today, down markedly. I did notice during the day we're at like 4.69. We closed at 4.66. So at the lows of the day again. And as you know, one of the ingredients that I need to see for a Santa Claus rally is consistently staying below 4.5% on the yields. Let's dive into that a little bit in a second, but I don't want to deviate here from the format. Microsoft up 0.65, Apple up 2%. This is before the close. Nvidia up 2.7, Google up 0.79, Amazon up 0.78, Tesla up 6.25. This is all percent, not points. Tesla up 6.25%. You had supporting cast like Adobe up 2.6. You had, Intel up 1, Qualcomm up 5.8, Salesforce.com, ticker symbol CRM, up 2%, ServiceNow up 1%, Cisco up 1%, JP Morgan up 1.7%, Eli Lilly up 4.66%, J&J up 1%. Pretty much everything that had any risk asset class associated was green today. Looking at sectors, I mentioned already that real estate was the leading sector. Then you had energy, consumer cyclical, financial, utilities, industrial, then technology. So let's talk about real estate and why it's bouncing so hard right now. So I will post a link on the show notes, but another friend of mine, colleague of mine that I respect, that I follow, is Based Money on Substack. You should definitely give him a follow. He had posted a link to a Bloomberg post on the Treasury decision yesterday on Wednesday. And you should take a look at this article, read what Based Money posted about what really fueled the rally today, and basically since yesterday, to be quite honest. But if you know the name Janet Yellen, or if you don't, she is the Treasury Secretary. And yesterday in the morning, before the market opened, they basically decided to buy the front end. That's lingo for short-term treasuries, like 2-year and the 5-year treasuries. So think of economics and supply and demand, right? If the Treasury buys a lot of those bonds, they're in demand, meaning that prices of those bonds will rise. And as if you listen to this podcast, you'll know that rates and the price of bonds is inversely related. They go opposite directions, right? So if Yellen and her team are buying 2-year and 5-year treasuries with our tax dollars like crazy, like a buffet, those bond prices go up, causing the bond yields to go down. So if yields go down, guess what happens to risk assets? They pop, they rise. So this can definitely attribute, I would say, 90% of this rally this week. And today is Thursday. That news came out on Wednesday morning. We rallied Monday and Tuesday. I suspect that that news that came out Wednesday leaked over the weekend, and people front ran and bought equities on Monday. But I also believe, and I could be wrong, okay, but my suspicion, looking at all of the data that I report on every day to you guys, is that we basically pulled forward the Santa Claus rally. Rather than wait till Black Friday numbers and then Christmas or holidays at the end of December, we basically pulled it forward to now. I find it very hard to believe that we're going to continue to rally from here, because it's been straight shot. Like, this has been completely reminiscent of a blow-off type action. Straight up. And the volume hasn't even been that good on this rally. And we're simply just accelerated elevator, express elevatoring to resistance at this point. And I think this is all based on the big boys, Wall Street, all trying to get out before the end of the year, before the next move down. That's just my hunch. I'm not trying to be Debbie Downer here, but I'm just looking at all of the evidence in front of me so far. Apple reported that they beat earnings. I mentioned this all week, that that's what I expect Apple to do. They always beat lowered expectations. But what is concerning is that this is their fourth consecutive quarter of falling sales and revenue. So they're going to have to change that. And I'll be honest, as a company, they're great, right? Like, they're huge, they're one of the largest companies in the world, and they're still able to produce this amount of revenue and sales is a testament to the company. But it's also harder to grow at that scale. So let's see how they react after the earnings call tonight and at the open tomorrow. Tomorrow on Friday, we have the jobs report number. Again, the way to read this is, if the jobs number is very good for you and I, the regular working class, that's going to be bad for stocks, because then the Fed's going to be like, oh, we need to stay higher for longer. If we're all crushed and there's a lot of layoffs, that'll be taken as good news, like, oh, what we're doing at the Fed is working and people are getting laid off. Yay. Maybe we can cut rates. That's literally the narrative that you have to watch out for right now. The S&P 500, it's trapped between its 200-day and 50-day moving averages. We may continue to rally. The 50-day moving average on the SPX is right around 43.47. We might get there by the open. Who knows? But it just feels like a blow-off type move, where we're just going to go back down and test the 200-day. But hey, it's seasonality, right? It's supposed to go up until the end of the year. That's what everyone is saying, but I just don't see it. I don't see it, guys. The 10, keep watching yields, keep watching the 10-year, the 2-year. It's fine. I typically watch the 10-year because I think that's probably the most important one. And the 10-year yield gapped down this week from like 4.77 to like 4.7 in a day, and it is sitting on this trend line where if it breaks, we might go under 4.5, like I've been saying that the bulls need for that Santa Claus rally. But I need to see it to believe it. Breadth improved, but it's not great. Yields are going down, but it's not at 4.5. And definitely there has been an equity rally. But let's see what happens now, right? We need more cards coming out of the deck. Keep watching breadth. I'll report on this obviously religiously. Keep watching the Magnificent Seven, especially Apple. And I will report back after the Friday close. If you're new to the Substack, for the Friday session, I typically will release the podcast covering the Friday session sometime during the weekend or on Monday morning before market open, like at 5 a.m. But with everything going on and depending how we close Friday, I might release it early, like Friday evening. But that's just kind of housekeeping on how I release the podcasts. And thank you again for folks that are pledging, subscribing, and following on Substack. I think we've at least gained 300 new subscribers this week alone. So truly, I thank you from the bottom of the heart. Because while I enjoy doing this, it's also really fulfilling to know that others are getting value and learning and enjoying the content. So that means the world to me. I think the last person that pledged, I'm just going to use their alias, Spooky John. Thank you for pledging for the annual $180 per year. Once all of the premium content starts to go live, everyone that has subscribed and pledged will be getting the 33% off as long as you subscribe and pledge before November 27th, which is Cyber Monday. And I'll see you guys after the session on Friday. Have a good one.